But on this track, we're going to talk about what's changed in the ATS regulation. So now that we've gotten the people who really who matter, who are here now, okay, you people, who are you calling you people? I would like to welcome on Gautam Gujral, Lilya Tessler, and Cathy Yoon. Give them a round of applause, please.
So thanks for sticking around. I know it's late. I know it's been a long day. But, you know, just preparing for this panel made me like take a trip back in my head to sitting in my windowless office with my office mate, Ethan Corey. We were both sitting in 1950s steel desks, and I was pounding away furiously on the computer. And as everybody on our team knows, when I type, it's really loud. Okay, they just get all my aggressions out on the keyboard. And what I was typing about was, you know, what should the future of alternative trading systems and national securities exchanges in America look like for the future? And so this was back in 1996, 97 that I was writing this concept paper together with a few other people at the Division of Markets at the SEC. So now I think about it, you know, that's like 20 plus years ago. And now all of a sudden, like, you know, a few years ago, ICOs were all the rage. And we, as Dave pointed out yesterday, we decided we weren't going to do one because we didn't think it was the right thing to do. And but then, you know, when people started applying for the ATS license to operate ATSs that actually were going to trade securities, that these people thought were securities and should be treated as securities, FINRA and the SEC put out this joint statement in 2019, which was basically, here's a list of everything we worry about, right? And so then, you know, in 2020, they put out a paper that said, okay, well, if you're an ATS, you can do the trade, but you can't settle the trade. And yet you have to go through this 4-step process. And they said, oh, forget about the 4-step process. We're going to go into a 3-step process. And so they've been reiterating on this, right? And so we're here to talk about what happened then after that. Like, why did those things happen, and what led to the December 23rd letter from last year, where they laid out certain conditions under which, if you operated under those, and you know, they said they wouldn't take any regulatory action. So perhaps you want to guide us through what you think that letter meant, and talk about, you know, whether we need more clarification, what it allows us to do, what it doesn't allow us to do, and I'll step in with questions.
Yeah, sure. All right, I'll kick it off. So, you know, starting in 2019, I think this started years before 2019, as Gautam mentioned with the ICO booms, there were a lot of digital assets that were securities that needed a platform, needed broker-dealers to support trading of them, and many of those either existing member firms or new applicants went to FINRA and the SEC trying to seek applications to either support those assets or not. There were a number of questions as to what broker-dealers can support those assets, and a lot of those discussions over the years is what led to the initial joint statement in 2019 that effectively set forth a number of broker-dealer models that FINRA and the SEC were comfortable, none of which had custody components to it. There were broker-dealers effectively offering private placements of securities, initial issuance or secondary trading. Secondary trading allowed for over-the-counter transactions by broker-dealers in digital asset securities. And then there was an ATS, a mention of an ATS model where that's where this 4-step process came from, where ATSs were able to operate a matching engine, but where all clearance, settlement, and custody happened between buyer and seller away from the ATS. And those 3 distinct categories were the only comfort that the SEC and FINRA had at the time for a compliant path forward for a digital asset intermediary. And then the statement raised a number of concerns regarding custody, some of them that were specific concerns of the technology, even though they were technology neutral, concerns that may have not necessarily been relevant to all digital asset securities, but may have stemmed from misunderstandings around cryptocurrencies as opposed to digital asset securities, and so that ties into later guidance that we saw. So I'll pause there and see if Cathy has anything to add.
I mean, I think the frustrating thing about all of the guidance that has come out since 2019 in the space, it hasn't really led us down a path of more clarity. And so the SEC and FINRA are very clear on the 3 models that they were comfortable with, but we haven't really moved forward since then. And I, earlier we had the panel on the ATS business models, and it's not cool when the SEC and FINRA come out with all this guidance that's not very helpful, because how are you supposed to grow and develop your business when you have no idea what's coming down the pipeline, what you're going to be able to do, what you're not going to be able to do. And so, we have these, 3 kind of overarching models that we're comfortable with, but I think in terms of scalability, it's not getting us to a point where we want to be in this space. And so I think we kind of disagree a little on whether or not the guidance has been helpful in the space. I think it's been crappy. I mean, there's not a way forward. We're not really moving anywhere. But at the same time, is it better to have these small little baby steps that might offer a way forward, or are we looking for something a little bit more radical to be able to kind of push it in a place where we are not penalized for the technology that we want to use?
And I would say, I think these steps over the last 2 years or 3 years, are substantial steps at the rate at which regulators move in terms of guidance. I was in this space in 2016 through 18, where a lot of assets were securities, but many people couldn't trade them, and so they tried to make them non-security digital assets and fit in this utility bucket that they clearly weren't appropriate for because there was no trading venue or broker-dealer, and so advocated with the SEC and FINRA for the need for guidance. What's out there now, and I think the December 2020 guidance on custody is probably the most helpful because there is some need for custody. Cathy will disagree with me in a second. But I do think it is a limited path forward for allowing for primary issuance, secondary trading of digital asset securities, pretty wide range of types of digital asset securities, ATSs that can trade a wide range of digital securities. But the custody component is where a lot of the challenge is, in that the special purpose broker-dealer custody statement that was released in December 2020 only allows for custody of digital asset securities on a blockchain, and a broker-dealer doesn't trade traditional securities. So then that raises a question of what's a traditional security versus what's a digital security. It doesn't allow that broker-dealer to custody non-security digital assets. And it puts a lot of onus on the broker-dealer to determine if the asset is a security, conduct operational and technology due diligence on the blockchain in which the security resides, extensive disclosure obligations for customers, for the platform itself, and a whole host of written policies and procedures that they need to have, among other conditions. But it is a limited special purpose broker-dealer. It will not solve all of the problems that exist for custody today, but it's a start.
Yeah, but also, I think that the reason they gave for requiring a limited purpose broker-dealer as opposed to a broker-dealer that can trade multiple assets is that, well, digital tokens are not covered by something called the Securities Investor Protection Act, and as a result of which, you can only trade tokens. Well, guess what? All private securities are not, privately issued securities are not covered by SIPA, right? So they should have at least allowed, at least in my view, that, you can trade tokens and you can trade other private securities, because then at least you would have given people a larger run weight.
Mm-hmm. Yeah, I mean, that's why I think the December 2020 guidance or release is crap. I mean, it is because I don't see it offering any clarity. Clarity would be helping broker-dealers figure out what is considered a security and what is not. The SEC claims that there are all these digital assets that are securities, but they're not saying which ones. They're not saying why. with this guidance, they're now putting all this extra onus on broker-dealers to do all this extra diligence. I don't know how the SEC can say that they are technology agnostic when this is just focusing on this one particular technology and making broker-dealers become technical experts in figuring out characteristics of blockchains as opposed to figuring out whether or not the security is eligible to be listed on an ATS. So for me, I think the better guidance from the SEC would be finally to come out with a roadmap for broker-dealers to figure out what they deem to be a security and what it's not. And the industry already has all of these safeguards and policies and procedures in place to be able to list them, to trade them, to protect investors. So, for me, I respectfully, maybe not respectfully, disagree that the guidance is good. But, as someone from the SEC and FINRA said earlier, one small step for the regulators is a giant step for mankind. I don't believe it. This is how they tried to rationalize it. For me, I don't think we're looking for lightning fast changes from the regulators, but I also do think that if they're going to say that they are not, regulating technology and that they're technology agnostic, then show it.
But if you're operating an ATS, right, and you just take the stance that I'm going to treat everything as a security, right, that comes to be traded on my ATS, do you think that the SEC would ever argue that you shouldn't have let this thing trade on your ATS because it's not a security?
Who knows?
Well, so I've had this discussion with the staff, and I do think that, regulation ATS, when you were drafting it, was written for trading of securities. So they don't permit non-security trading on an ATS generally.
Yep.
So that's, you can't permit trading of a cryptocurrency. You can't permit trading of a commodity on an ATS. That's not what it's meant for. So you really are putting the onus on the broker or the ATS operator to make that determination. Otherwise, they can't support that asset.
Right. My take on all of this is that, okay, so they got a whole bunch of things wrong and they can do better, right? But isn't it better to at least have a road for the next 5 years, bumpy as it might be, than to not have gotten the guidance? What's your view on that?
Yeah, so I think it is limited guidance, but it's also not exclusive. So there could be other ways and to go to the staff and get guidance that may be supplemental or different than this custody statement. Because under a customer protection rule, there are other good control locations that you could have. So for example, you mentioned private placements that don't have SIPA coverage. Typically, those privately placed securities are held at the issuer, held at a transfer agent. This custody guidance really speaks to a broker-dealer holding a private key, and you don't need a private key for a privately placed security oftentimes. So there are other ways you can comply possibly with 15C33 and hold it at other good control locations that may not require changes to this custody statement.
Yeah, but it's also so limiting right now because I think for me, I think the security space is kind of going through like an existential moment. Do we, in the security space, want to kind of replicate what's currently being done in the traditional space, where you have these active markets, both on, maybe not so much on the private side right now, but I think we all want to get to that point. But if we're trying to replicate what's being done in the traditional space, you want to have market makers, you want to be able to kind of facilitate trading, facilitate volume. The limitations right now for what's allowable for digital security ATSs, it doesn't facilitate that. So you're kind of stunted and limited from that perspective. INX, we take a little bit of a different approach for our ATS. We do have the 3-step program, but we don't use third-party custodians. The securities custodian on our side, MetaMask wallets, right? So it's a little bit different. It's kind of empowering the user and the investor to really take ownership of your securities, but it also allows you to trade securities 24/7, 365. You don't have to wait, for your custodian to be open, a third-party custodian to kind of do that. And so are we in the security space trying to really replicate what's currently being done, or are we trying to use the technology that we're seeing in DeFi, just in the crypto space generally, and do we want to expand and change the way we trade securities. So I think everyone in this room probably is debating that at some, some level. And we just need to figure out, what direction do we want to go in as an industry, and then to be able to go to the regulators and let them see what we see at this point.
Yeah, I also wanted to mention, we discussed the 3-step versus 4-step process. The 3-step process came from this ATS no action letter that SEC issued FINRA in September 2020. And it allows for a buyer and a seller on the ATS to have a separate custodian away from the ATS, but where the ATS can give conditional instructions to help mitigate some of the clearance and settlement risk that existed in the 4-step process. But that suggests, and it exists prior to the custody statement coming out later in the year, that there are existing custodians that are not broker-dealers. There are bank custodians, there are trust company custodians, there are self-custody options that exist for digital securities today and have existed during this whole time frame. Although, we want more guidance for broker-dealers to be able to support digital securities custody, there are these alternative paths for digital securities that many in the industry are taking advantage of already.
Right, but to be able to operate a MetaMask wallet, right? You have to be pretty savvy to operate a MetaMask wallet, right?
Mm-hmm. But there are 10 million monthly users out there right now.
10 million, yeah.
I mean, that's a good number. I mean, could you imagine if we had those numbers in the security space right now, in the digital security space? That would be amazing.
Right.
So yes, there might be a technology hurdle, but I think we're also dealing with generations of people and investors who only know their phones and digital wallets. And so I think at some point the technology and being able to use it, it's not going to be an issue.
But that's for individual investors, right? But most investors invest through vehicles, right? Through mutual funds primarily and ETFs, right? And those people are required to, those entities are required to hold their holdings at banks,
Yep.
right? So, I think that different solutions should be available to these banks so that they can avail themselves of trading in these securities, which unfortunately the guidance does not give clarity on right now. It doesn't prohibit it. It's, as you said, it's non-exclusive, but it doesn't give you guidance one way or the other.
Right. And if we all know the people in the security space is that we are probably a very conservative bunch, and we're not going to take the risks and not do things that are not laid out for us.
Right. So, since we've got a little bit less than 2 minutes left here, I wanted to ask both of you your opinion. This is a 5-year no action period that they've given us, the sandbox, as you were calling it earlier, right? Do you think that we will be successful as an industry in changing a lot of that stuff around so that we can operate the Ferrari with real tires as opposed to the bicycle tires that were discussed earlier?
Yeah, I do think it is the start of a proposal. I also want to note it was drafted under the prior SEC administration, and so there could be changes coming under Chair Gensler, who wants to have more authority, wanting more of these digital assets to be securities. I think we will see more expansion of some of this guidance or additional guidance in this area. It is also a request for comment. So there's a number of questions, and there's been hundreds of comment letters from the industry, both institutional and retail, regarding some of the challenges here. So I do think there'll be more guidance on the custody side. There needs to be also more digital asset securities issuers to be trading on these ATSs to have a bigger market share for the regulators to really focus on guidance in this area.
Yeah, I don't like to be, I want to be optimistic, but I think just with the speed in which the regulators have been operating and approving new applications, expansions to permissions, I don't know if 5 years is even long enough. It's probably too short at the speed in which things are moving right now. So I'm I'm not very hopeful there, but I do hope that as an industry that we're able to come forth with really smart solutions and that we're able to start implementing them. And maybe we don't even need to wait out the 5 years and that there will be movement from direct action by the participants.
Okay, well, thank you all.